Hello traders, Gary Wagner here, approximately 11:30 in Honolulu, 4:30 in New York City on Tuesday, the 28th day of February 2012, and this is the daily report for gold and silver. My God, consolidation or correction? Well, there can be no doubt. This is absolutely a consolidation that we witnessed following a pretty strong breakout to the upside in the precious metals market. Currently, we have gold up about $18, $18.10. As you can see, $17.85, $17.86 in that area. Silver, tremendous jump almost at $37 per ounce. Traders, if you recall, we talked about the fact that if we broke through a certain level, and once that level was breached, we really wouldn't have any kind of real resistance till about 37 in silver. And you can see on this chart that we've fully gone beyond that $35, the initial benchmark that we had. There's that doji that we saw the other day. Absolutely. A consolidation within the market, a resting point before we saw the market break out utterly and strongly to the upside. This, of course, daily candlestick chart of the spot silver market. When we look at gold, we saw in the market the potential, and this was back on Friday, of an engulfing bearish, these two small candles in here. However, you've got an engulfing bullish. You've got an absolute breakout to the upside. On today's show, I want to talk about the different areas I think we can see this market go to. Of course, traders, we have multiple positions in this market. For those who got in a little late and took the last call, we've got good profits in that. And we'll talk about the proper time to add to those positions and really what to look for, all on today's daily report. Traders, one way to look at potential target points for the upside is to take a look at the Elliott wave cycle, take a look at full cycles themselves, and then ask the following question. If the next cycle repeats itself to go 100% of the distance, meaning the price moves 76, 61, 38%, where would that market go? With that in mind, let me present this study to you. A 720-minute straight candlestick chart, although it's blown small enough that we're not really looking at the candlesticks patterns themselves. Again, a full study will start with this particular move. This is back from February 2011. As you can see, market trading around 1300 up to 1900. Market then comes back down. This is the second of the two lows, of course. Around 1530, 1536 is where I've got this mark. Now, what I'm simply doing is a Fibonacci extension in which I am asking the following question. If we take a look at the full length of this cycle right in here and we extend it to the future, a 50% move would be 1831, 76 would be 1994. And if we got a move that was equal to the last rally, the last cycle that we saw, because of course this is our ABC, 1, 2, 3, 4, 5, 2140, which is where I come up with my top of the market that I'm looking for, which is 2140, based upon a complete 1, 2, 3, 4, 5 wave count. Now, right now, I think that we have a realistic opportunity. Of course, we have to breach 1800, but I'm looking really on this wave here to go probably to about 1831. That's a good potential. If it's incredibly strong, it might go as high as 1900 and then begin a correction once it hits that 1900 level again. But the key is, traders, that on the low side, we've probably got a move that could easily take us another $45 in gold before seeing any kind of a correction that's sizable. And that being said, for traders that have multiple positions, 3 and 4 positions you've been buying in since 1580, you might want to consider adding to any of the dips that you see. For traders that have just gotten into the market, I want to get a little bit more profit behind us before we go ahead and add. Gives us a little bit more safety. I'd like to see how it's going to react if and when it goes to 1800. And traders, now for silver. You know, I'm starting to get really excited about silver. The fact that we have breached this 35.35, that was my resistance level. That was our initial target. Realize our first position is down at 28.10. We've got phenomenal profits. Now, where do I think this market could go? Well, there's a couple of places we want to look at, but I do want to say this. My belief is that our next real level of resistance is going to be $44 an ounce. Now, that's a good amount away. I mean, you're talking $9 away. And until it hits that point, there are some interim points that we'll want to take a look at. And the easiest way is simply by looking at a horizontal line at certain tops in the market and then copying them so we can put them in other places. Let's go ahead and... So traders, all I have done is added a couple of horizontal lines, and really what I'm doing is picking some of the tops or bottoms that we know historically will cause either support or resistance. You realize support and resistance are always one and the same thing, whether you're standing on the second floor looking down at your floor or you're on the first floor looking up at your ceiling. Support and resistance is both that structure. So we look at support and resistance in the same way. So you can see that we are currently right at this particular bottom that it hit. So we've got that point. We've got another one that we have plotted, another point, which is this top. We have also plotted this top. Of course, this is the $44 point. So these are the real interim levels that we want to consider. And in terms of where they match up, simply what we need to do is to blow the chart up, and we should be able to scale or see it a little bit better. Let me go ahead and bring that down a little bit for us. And actually, the best way will simply be to put up our crosshairs. So, of course, the first level, this is 38.72. We are just below this level, which is 37.07. And so those are a couple of target areas that we want to look at. And then the last one, prior to $44, is going to be right in here, so about 42.23. So these are going to be the different levels that we want to look at to see how the market reacts. But as I said, it is my current belief that we should have the ability in this market to go to about $44. It's not going to be in one sweep, of course, but I think that ultimately we should get there. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.